Hello traders, in this module we're just going to take a step back for a moment from the 12 months of ACB templates and just take a breather and review some simple concepts. One of the objectives of the masterclass is to hopefully not only enhance traders' understanding of what an ACB opportunity is and how they are scalable and reproducible. And if you keep the process very simple, you can reduce the amount of variables and inconsistencies in your trading, stepping back and understanding the bigger picture. And as the quote by Alexander Elder says, the goal of a successful trader is to make the best trades. Money is secondary. And one of the problems with a lot of retail traders and traders in general is that they think they need to trade all the time and they need to master their understanding of trying to figure every little movement in the market out, or figuring every movement out of their favorite instrument. And my approach has, through a lot of painful learning and over time, as I've said repeatedly, you can make a lot of money on the days and the setups that it's easy to make a lot of money on. Now, hopefully today's video will help to shift your thinking in the direction of understanding that, even more crystallizing the opportunities that are there when they are scalable, and that trying to figure out every little movement in the market is futile and over time ends up doing damage to traders. They engage in impulsive, irrational, emotional activity on the wrong days, and they can do a lot of damage not only to their financial trading account but to their psychological capital. So bear with me through this video. We're going to be diving in deeper and touching on a few things in a primer for a couple of hopefully greater understandings, but remembering the goal is to find setups that you virtually almost can't lose on. And that was the objective with my sons, trying to teach them to only hunt out this opportunity because it's almost impossible for them to lose on. And I did not want them to go down the rabbit hole or to have to go through any of the experiences that I myself have gone through, and several of you have probably also experienced if you've been trading long enough. But it's about hunting out opportunities where we virtually can't lose, and they go to the close of the day, and they're scalable in size. Now, the big thing to understand is that sometimes you're going to get opportunities that are going to wipe out an entire 3 levels or maybe a week. And then there's going to be other days that are going to just go from one extreme to the other, and then we take what the market gives us. It's an ACB template. We lock in the profits, and we walk away. We don't get greedy. We don't get emotional. We don't get impatient. And there's going to be days where markets don't crystallize into this opportunity, but when they do, and they are scalable, because we're getting them on a Thursday and the setup is there, the ACB setup is there, whether it's in the long direction or in the short direction, these opportunities are where traders can make month money, and in some cases, if you're trading large enough, they can be year money. And so the idea is to train your brain to only hunt out these opportunities, whether they're for one day or for wiping out an entire week, and stepping back and understanding the higher time frame setups. Like Richard Dennis's quote says, you have to minimize your losses and try to preserve the capital for those very few instances where you can make a lot of money in a very short period of time. What you can't afford to do is throw away your capital on suboptimal trades, and that's where I talk about trying to catch highs and catch lows and trade every single day, whether there's an edge or not. And that's where retail thinks that they need to figure out the market instead of finding the setups where it's really easy to make a lot of money on. Now, I'm just going to take a moment. This is a bit of a primer for what's coming to the playbook, Mastering First Red Day, First Green Day Understanding. I think obviously over time there's been a lot of really great feedback and a lot of questions repeatedly on some simple concepts. So I'm going to be going back and adding some material, but we'll touch base on this. And as you've noticed, my whole thesis comes from the higher time frame. But what happens is that traders are getting caught in minutia and little movements inside of ranges, but the simple big picture understanding is that we virtually want to be targeting opportunities in line with the higher time frame. And if we look at these charts, just as an example, a monthly chart, where we have a trending month, whether it had closed in breakout, whether it had broken out and reversed, whether it's trading sideways in a trading range, but we can still have opportunities for ACB templates based on understanding the higher time frames. When we have high or low closes of months or weeks show up on our scanner, whether it's a Wednesday, if you crystallize this opportunity understanding of the Wednesday setup, all these other opportunities will fall into place. But in simple terms, if we have a trending month that's going to open up, go lower before trending for the majority of the month, putting a high in place and closing, we obviously want to be targeting the first green day opportunity. Now, we may not get that first green day opportunity. It may come on a Tuesday, or it may come on a Friday on a news catalyst or CPI or FOMC, whatever that may be. But we can still have a higher time frame understanding week 1, week 2, week 3, week 4 for when we have a market that closes in breakout, whether we have 3 lower closes putting a low of month in place and a first green day opportunity, and vice versa for a first red day opportunity. But not getting caught on the inside calling every down candle or every up candle a first red day or first green day. Understand the higher time frames, and then when we have markets closing in breakout, understanding if we have a setup heading into our basic model is the Thursday 3-session opportunity. But when I go through and put the first red day, first green day masterclass together, I think this will really cement home some of the other opportunities, but more importantly, give you a crystal clear understanding of when you have an ACB setup. You know, as the video is titled today, the Mindset and Daily Process, it's helped to crystallize stepping back and allowing these markets to set up so that when you do have an opportunity and it shows up, whether that's for the ACB opportunity, you're entering into trade setups, again, that have a 90-10 edge in the market, and understanding the importance of time rotation. Week 1, week 2, week 3, week 4. We have news, major red news that can propel a lot of these movements. Again, non-farm payrolls, CPI, FOMC. We have other rate release announcements that are for individual currencies. But stepping back and then allowing each week these templates to set up. And the simple model is checking for markets that close and breakout on a Wednesday at 4:59 p.m. New York time as the highest close of the month or lowest close of the month or week. And then how does it set up into our Thursday session? So remembering the object of the masterclass is to master the understanding of what an ACB setup is. It's not about catching moves. And so what happens is on the weekends, traders step back, they see the bigger picture, they study all weekend. And as soon as the market opens on Sunday night, they go back into that perspective and emotional state of where they want to find a trade. And like George Soros says, it's not whether you're right or wrong. It's about how much money you make when you're right and how much you lose when you're wrong. Now, I want my sons to trade setups where they virtually can't lose. And set and forget. The object was set and forget, taking the entry, placing a stop, and walking away. If a market clears a level, moving that to break even, but not interfering with that trade playing out. Zero stress, zero emotion, zero thinking, and zero management. That's the object of the ACB templates. Now, for simplicity and reproducibility, in my experience, the highest probability ACB templates show up on a Wednesday close in breakout, again repeating, high close of the weekend month or low close of the week or month in a Monday, Tuesday, Wednesday setup. Now, as many of you have saw through your own experience, if you're hunting out that template each week and you're not finding it and you understand the beginning of the new month and whether we've broken monthly levels, we're either inside or outside, first green day, first red day helps cement that understanding, and you will identify over time with experience the other ACB opportunities on different days. Now, for my sons, I want them to show up on a Wednesday looking at the markets that have closed in breakout, and preparing for one trade, one setup on a Thursday, if indeed that presents. That's reproducible, rinse and repeat, and simple. And my advice to those of you that are potentially struggling or just learning is to be patient and step back, because one scalable opportunity 2 to 3 times a month will significantly compound your account, and they are scalable and reproducible on any instrument. Now then, differentiating that, the price action on a lot of days is the escalator back and forth type of activity. They get it in Asia, they get stopped out in London, or they try to get in London and they get stopped out in the US. They get in the US session and it could be on the wrong day and they get chopped up on both sides, or they catch a move. And the catching the move trade, it may give you 50 pips, and it may be scalable, it may be a coil, it may be a first green day just by coincidence. But if you tie that in with your understanding with the higher time frame, you may now be targeting scalable opportunities on the front side of a month, and even on the back side of the month if it's putting in the closing range of the month. But I want to impact you with the headspace of trying to catch real trades every day with no real edge for sizing, and trying to trade and catch moves because you feel you need to make money every day, which is where traders will end up winning some and losing some. And they don't really go anywhere, and they certainly don't understand when they should be all in on a winning ACB setup that goes to the close of the day, that's scalable in size and driven by all time frames. That's where traders can make a lot of money on a day and a setup where it's easy to make a lot of money. Zero stress, zero thinking, zero emotion, and zero management. The Wednesday template is easy for my sons to hunt out. It reduces the number of trades and low quality trades that they're potentially going to take if they want to learn how to trade. The more they learn, the more trades they take, the more inconsistent their results most likely will be. But they'll increase their odds of winning trade setups if they hunt out the same setup every week on any instrument. If they can find an ACB setup on any instrument on that Wednesday close, it increases their odds of success and consistency over time. It decreases the likelihood of them engaging in random, impulsive, irrational, and emotional behavior. And that is where traders end up doing most damage. And it also makes their trading business scalable in size over time. Just rinse and repeat. That's the whole idea. Rinse and repeat. Scale it up in size. And as a result of mastering that understanding, I don't want them to learn anything else. If that's all they're looking for and they think, well, geez, this is simple, why don't I just keep doing this because this is working? ACB templates can set up anywhere in any session and any time. The most important part is sticking to the process in the beginning. Once you master that, you will start to recognize the other opportunities that will present the same templates, perhaps different days, front side of the month, back side of the month. Now, most importantly, Wednesday's close, an instrument closing in breakout at the highest or lowest closing price of the month, is on my watch list heading into Thursday. An instrument closing in breakout on a Wednesday at the highest or lowest closing price of the week is on my watch list. And we've seen different examples of how that can present. Now, the goal for my sons is to focus on trade setups where it is almost impossible to lose on. Going back and looking at the first slide, an opportunity that's going to close that's scalable in size that is virtually impossible for them to lose on. Now, the next question that I've received frequently is how many instruments should I have in my basket? And I would encourage you just to keep it very simple. And, as I mentioned in an earlier video, you could have a few major pairs, major currency pairs. You could have a few cross rates for simplicity. Now, I'm going to show you an easy way to track pairs that have potentially closed as the highest closing price for the week. There are two options. You can just scroll through your charts. Again, you're only looking at this on a Wednesday for the basic model. So we're talking about, virtually 1 minute, less than a minute per chart, because it either closes at the extreme of the week or month on a Wednesday in breakout, or it doesn't. So we can scroll through our major pairs as well as 3 or 4 cross rates from the majors. But I'm going to show you what I tend to focus on, and also the most sort of frequently recurring opportunities based on the pairs that show the volatility month in and month out. But I want you to think about something just in simple terms, a major currency pair may give 1 or 2 ACB setups per pair over the month. Now that doesn't sound like much, but if you're only hunting out 1 per week, and we have a basket of anywhere from 10 to 20 instruments, we're bound to get 2 to 3 of those a month. Now remember, these are scalable opportunities. Scalable meaning they're set and forget, and over time we can increase size into those trade setups, still managing our risk and having a 3, 4, 5, maybe 10 to 1 opportunity depending on the instrument. So rather than trading all the time, understanding that 1 or 2 of these even a month can still significantly compound your account, and if they're the right instruments, can be month money or year money when traders are trading large enough. Now if we have a few major pairs, we add some cross rate pairs into the mix, and remembering the goal is to hopefully just find 1 per week on Wednesday's close. They're set and forget setups if indeed they show up. And we'll talk about how sometimes what's going to happen is that we're going to have an instrument that gives us the signal. So just before we get there, we'll just having a quick look at the pairs that I mostly follow myself: pound, pound Canadian, pound Australian, pound yen, pound Swiss, euro, euro Canadian, euro Australian, euro yen, and the US yen, CAD yen, Aussie yen, New Zealand yen. Now these are major pairs that typically will be volatile enough and set up usually, every 2-3 months. One of these will give a large move, but month in and month out, most of them offer at least one great ACB template. Now there are other pairs and there are other instruments that will move in Asia, or they will move in London. And then sometimes one of these majors and cross rate pairs will set up perfectly for a US session trade. You can use TradingView has a free Forex scanner to identify which pairs have closed at the highest or lowest percentage gain for the week. Now I suggest using the week. We'll look at this in a moment. You can use the day, and it just shows a pair that's moved 2 or 3% on the day or the week from Friday's closing price. And that can bring up a cross rate pair or a major pair on our watch list. Now sometimes the major pairs, when they've moved the highest or lowest amount on the chart, I'll often just bring up the cross rate pairs and skim through those really quickly. Again, this is a 15-minute process. So if you go to TradingView, they have a free Forex scanner link. Just click on that or enter in this URL. Now this is the major pairs. So for example, today I'll remove this technical rating that has no relevance here. This is just a free page. We can click on percentage change. This is from Friday's close. It's a Monday today, but we can look at the pairs that in how much percentage gain they've had since Friday's close. Now you can change this to 1 day on a Wednesday and do the same thing. Now I just have the major pairs. For me, that's simple. If we go over to this link here, we can add the minor pairs, but often what you'll find is that it has all of the pairs in reverse order as well as other pairs. But if you just take a moment and scroll down the left-hand side of your screen, you can identify the pairs that potentially are on your list. For example, we have the Euro Australian, which has moved the most today out of those cross rate pairs. Obviously the other ones are, but they're the reverse pairs. We're looking at Euro Australian, and we're just looking at a 1 hour chart on Monday, and we can see this market has moved quite a ways away from closing price. So the scanner can help bring up pairs, and it doesn't matter if you do it right at 5 p.m. or into the new day, because if we have an ACB template and the market is coiling sideways into our session, we'll still have a market that's up high on the percentage or down low on the percentage. And so that's just a way to identify instruments that have moved significantly away from closing price into the close of the day. And there's plenty of time to be able to put those on your watch list or just skim through the pairs that have closed in breakout. So repeating, that's TradingView free Forex scanner, and we can just look at our major pairs again, keeping it simple and just looking at percentage. You can change this and personalize it over on the side with your filters, but I just look at percentage and the amount of change, and that's just a way to bring up instruments with the currencies on our watch list on a Wednesday close. Now with the metals, my main focus typically is gold and silver. Now, as I mentioned, copper is on my list, but I find that often copper moves mainly in the other sessions. Now, funny enough, the last few Fridays we've had excellent opportunities with copper closing at the high of the week on a Thursday, giving traders a fantastic Friday ACB opportunity. Now, again, the basic model, I keep repeating this so that traders don't get off track, is Wednesday, high close of the month or week, low close of the month or week. But when you start to step back and get a bit more mastery and confidence with this, you'll identify these other opportunities when they close at the extremes in line with our higher time frames. NASDAQ, Dow Jones 30, and then secondly, I always look at both the S&P and the Russell. Now, cryptos have definitely been more on my watch list lately. We've had just some significant opportunities, and we're going to talk about cryptos and energies a little bit separately, as their behaviors have some other characteristics that are important to address. Obviously, cryptos trade on the weekends. I don't look at that, but I do look at the end of day, the daily charts again. So the importance of understanding the higher time frames when we align with those setups when they present. We are going to continue to get great opportunities on those markets. So understand this. You are going to miss some opportunities. Now, missing out is in your head, because these setups are going to repeatedly forever and ever going to sometimes move in Asia. Sometimes they're going to set up for a London trade session opportunity. And sometimes they're going to explode on a major red news catalyst and run away without you. Okay, and I want you to understand this importantly. It does not matter. What matters is recognizing the templates and the setup that you can't lose on the ACB templates. If it runs away without you on a major red news catalyst, it was meant to do that. It's meant for you to chase that. If you take a first bar entry or a first bounce entry, that's for that day in that session till close, reducing size, managing that trade to the break-even point, and other than that, walking away, locking in profits. But when we don't have news or anything that prevents us from having that opportunity tradable, we want to make sure it's the template that you master and then executing that opportunity when it presents. There are going to be templates that set up perfectly into a Friday instead of a Thursday, and that may have relevance to what's on the calendar, to where we're at in that monthly higher time frame cycle, and it may move in London instead of the US window. But if you master the understanding of these templates, regardless of the session that you're trading, these are scalable in size. Not worried about trying to catch the trade every day on the inside. Where is my scalable ACB template? We have an example of where a market has closed in breakout, taking out the previous weekly high, coiling sideways, all time frames aligned into the London Open, all the way till close. This was a non-farm payrolls Friday. We've talked about this template before, but it's about recognizing the templates, training your brain to hunt out winning setups, not to catch trades. We might get the close and breakout on a Wednesday, and we come to our US window, and the market has already started to break down in Asia, collapsing further in London, coiling sideways into our US session open at 8 a.m. But the further along you get with your understanding of the templates and your confidence in execution with the coil, the greater these opportunities, and more frequently you'll have an understanding of when you can't lose on a winning trade setup. We're going to show up outside of our timing window. This is an example of a NASDAQ trade, closing in breakout on the Tuesday, an inside day, right out of the playbook, an inside day and a London session ACB template. Different than the monkey hammer, but it's a very similar model, different session, a US market. Now, again, understanding the first thing that happened was this market traded back inside of the range at the beginning of a month, which went back to our very first slide. Understanding the higher time frames and the monthly rotation. The month closed in breakout, dumped down, closing in breakout. An inside day signal day. So I'm painting the picture of how these best trade setups will tie everything together when you understand the higher time frames. And then, of course, a closing range opportunity at the beginning of our new 4-hour rotation at the high of the new month, high of the week, for an ACB reversal closing out the week. We're going to have setups that move outside of our timing window on a Thursday, and traders are going to say they're not going to understand why those templates set up. Now, again, this is a bit more advanced, but I'm trying to get traders to step back and start with the basic model. If you master that basic Wednesday close at the extreme in breakout, you'll start to see other template opportunities setting up. New month, new timing cycle. That first closing price of the new month after it closes in breakout is the high close of the new month. We have a high of the month and a high closing price of the month. The market trades back up into the high of month level later in our day after major red news before an all-in collapse, a very large move, huge move. This is why it's important to step back and not get caught on the inside, always trying to catch the high and catch the low, but stepping back and understanding where are the ACB templates setting up. There's going to be markets that close in breakout, and we're coming to the screen, and it's going to be an absolutely perfect textbook opportunity, but there's major red news on the calendar, and that market explodes and goes till close. Now, first bounce, first bar, if traders choose to participate in a perfectly well-engineered template news catalyst, a news momentum catalyst opportunity, again, my perspective on this is reducing size, still managing our risk, but having the larger time frame understanding of a hold till close trade opportunity. And just where CPI or FOMC or non-farm payrolls can interfere with a perfectly well-engineered template, but still being able to participate possibly in a ACB template. We're going to have markets that break out and then establish again a first green day. Consolidate. We have one higher close, two higher closes, a breakout pullback, and a third higher close. Coiling sideways at the high of the week, high of the month level, and reversing. London, Asia, or New York. In this particular case, it's a London reversal, a Europe Open reversal, all the way till close. So, impressing upon you that these opportunities are everywhere as you master that understanding and stepping back and letting markets set up. Keeping things simple. As I said, my sons are learning Wednesday close at the extreme. That's it. That's the easy rinse and repeat model. If they don't get it, there's no trade setup. Now, as their skills improve over time, if they find that opportunity on a different day and it sets up textbook perfect, front side of the month, back side of the month, being able to execute that trade in the coil, managing the risk, moving to break even, and walking away and locking in the profits at the end of the day. We're going to have opportunities perfectly engineered. We go to our screen, but it's already moved in London. It's already moved in London. And in my son's particular case, they will not be chasing anything. It either gives them the U.S. session opportunity or there's no trade. But these setups can show up in any session. Now, again, this is a currency pair, but as we saw in the NASDAQ, we saw an excellent London ACB setup. In this particular case, we see a London ACB setup, closing in breakout at the extreme, the high close of the month, coiling, and giving the reversal all in till close trade opportunity. But then we're going to have markets that give us a signal closing in breakout on Wednesday as the highest or lowest closing price of the month or week, and we're going to come to the screen with that higher time frame understanding and identify an instrument now that can potentially be setting up for a New York session trade opportunity, a 3-session setup after closing at the extreme. Reinforcing that the 4-hour rotation will typically on every given week put in one of the extremes. Now, whether or not that is related to a trade setup is different, but most importantly, understanding time rotation, currencies, 5 p.m. rollover with no gap their 1 hour rotation earlier than indexes, metals, and energies, which don't start trading again until 6 p.m. New York time. We head into a new month. We have a new timing cycle, and we have a market that closes at the extreme on week 2, coiling sideways into our New York session. Now, I want traders to remember one of the ways to manage your risk, if you're just learning and you just want to put a position in and a stop and walk away, this is a 4-hour chart. We have a 1-bar stop, heading into our 9 a.m. U.S. session, new 4-hour candle. We have a market that has closed in breakout at the extreme, coiled sideways, giving a pin hammer engulfment of an inside 4-hour candle. We have an opportunity to position ourselves, put a stop in place, an entry, and walk away. That's our worst case scenario stop off the 4-hour chart. The same situation can be applied to the 1-hour chart. We have a market that has engulfed and began to coil sideways heading into our US window, a 1-hour, 1-bar max risk on the trade. So if traders take a position and they place their stop at the extreme, that is our worst case scenario loss. And again, targeting back towards the high of day and potentially a high of week level. In this particular case, high of month level as well, as we are in the second week of a new month. Now, I'm repeating some simple concepts in this video for the purposes of starting the new week in our masterclass ACB templates about markets closing in breakout and coiling sideways. So there are a couple of things to really remember about the coil. Number one, time frames are rolling over. If they're going to be reversing this market or even in a trending situation, coiling sideways, all time frames are coming together now. All time frames. Important to understand. That's what those EMAs represent. When we coil sideways, that all time frames are behind this move. And as we get a 3-session setup, this now potentially has the higher time frame opportunity to be moving back in the other direction. So we talked about at the beginning of this slide, the first green day, first red day type of opportunities. If we are at the low close of a month, this market may potentially now be reversing and heading back towards the high of the month. Just something to think about. And in this particular case, we have a beautiful coil, but we had PPI at 8:30 New York time. And this is a Thursday, and I've talked about on the backsides of weeks that some of these major red news releases can act as catalysts for these trades playing out. Now, this is a cross-rate currency pair. This is an excellent opportunity. I've talked about US dollar-based instruments potentially having more volatility or reaction to US major red news. In this particular case, we have a cross-rate pair that has set up textbook perfect. Now, I would be willing myself to put a starter position into the market as this coil begins to play out after major red news, scaling into this trade. So the initial starter position, I can manage my risk. I don't have a lot of risk on the trade, but if the trade was to explode and run away without me, I'm still in that market. If it was to stop me out, even with slippage, I'm not going to experience any major loss on the trade, just getting stopped out. But once that news is released, we go back to business as usual. We focus on the setup, and I would be scaling into this opportunity until it broke that news candle high level. So a market that has given us a textbook perfect opportunity. Wednesday closing at the extreme low of the month and the lowest closing price of the month in a perfectly well-engineered ACB template. And once this market has broken out and trending, moving it to break even, walking away and letting the trade play out. Coming back to our first slide and just, again, today starting it off with a bit of mindset reset, understanding why to focus on ACB trade setups. Virtually the odds are stacked in your favor, and that is the goal. That is the goal with teaching my sons, and that is the goal with the ACB Masterclass, is to focus on setups where money is going to come as a natural process of sticking to those highest probability opportunities. I'm not interested in taking a lot of trades or trying to figure out the movement in the market or little 1-minute levels or anything else. Where is the ACB 90-10, and in these cases 99. I'm going to call this 99-1 trade setup opportunity. Set and forget, zero emotion, zero stress, zero thinking, and zero management. So have a think about that. Again, we're going to be diving deeper into the higher time frames, but we're going to be continuing our 12 months of ACB templates, focusing on where we have the few instances where we can make a lot of money in a very short period of time. Keep it simple, traders. Stick to the best trade setups. Don't engage in impulsive, irrational, emotional activity. We'll see you in the next video.